The reasons behind Bill Gates' stock sales are terrifying. Bill Gates, co-founder of Microsoft Corporation and one of the richest men in the world, has decided to sell off his entire stake in the company. But why? Should we be concerned about his actions? Gates is well known as a CEO, but he excels even more at expanding his company's wealth as well as protecting it. Michael Larson, Gates' money manager, has helped him amass $50 billion in wealth over the past 2 decades. In addition to making a fortune during the bull run, Gates and Larson were also well prepared for the subsequent dot-com bust and economic recession. Because of this, he has been able to steadily increase his fortune and outperform the S&P 500. Both Gates and Larson are taking extreme measures to ready themselves for what is sure to be the biggest economic downturn in history. Many economic giants are experiencing a downturn in their economies. If you want to know more about the situation, please visit our channel and watch our videos. Welcome to Marketify, where we'll give you the latest updates in the financial space as well as business. There are 3 possible reasons why he is selling off his stocks. 1. He is concerned about the market. The market has been volatile lately and he could see a correction coming shortly. 2. He sees better opportunities for growth elsewhere. He's looking for new opportunities to invest his money in companies he believes will make him more money. 3. He believes Microsoft to be overvalued right now. The company is still doing quite well, but he feels that it is being overvalued. He hopes that by selling off his stock now, he can get a better price when the company does eventually correct itself. In this video, I will focus on the first 2 reasons. Bill Gates' company, as said earlier, is one of those who survived and thrived during America's recession in 2008. It was he who convinced Microsoft to invest in Linux operating system for mobile services. This is one of the best decisions that a company ever made because it allowed them to diversify into the mobile market. A few years later, they acquired Nokia, another huge player in the industry, which made them even stronger. This success helped him grow his net worth to more than $100 billion. Based on this, is it possible that Bill Gates is gearing up for another recession that may happen? Maybe yes, maybe not. It is anyone's guess. But one thing is for sure, he is selling off a lot of his stocks to make sure that he is not caught flat-footed when that happens. That shows how much he values his investment and how he protects it from any kind of risk or uncertainty. In line with this, Bill Gates may also want to put his money somewhere else. He believes that there are better ways to make money than investing in Microsoft. As of now, he invested in several technology companies including Uber, Alibaba, and Facebook. These companies are doing very well right now and they are growing at a very fast rate. But what drove Bill Gates to believe that a recession is closer than we think? As said in our previous videos, the Russian-Ukraine war had major effects on the economies of the world as sanctions are enacted. For the US, inflation is rising. Consumer confidence is at an all-time low. The war between Russia and Ukraine is raging, causing oil prices to spike. People aren't saving much, and the US debt to GDP ratio is at an all-time high. In 2021, the government spent trillions stimulating the economy. In 2022, however, the government will begin to withhold trillions of dollars from the economy. Specifically, Gates is worried about the Federal Reserve falling into the artificial trap they set. While interest rates are low, corporations are not spending and making investments to grow their business. That is because their cost of capital is very low. To prevent the worst case to happen, the government may either destroy the US dollar, cause global financial chaos, or collapse the economy, threatening to burst the debt bubble. To prevent an unprecedented collapse, the Fed has opted for option 2, which involves slowing the economy. The Federal Reserve just increased interest rates by 75 basis points, the greatest increase since 1994. This boost is really helpful in reducing inflation, but it also poses a serious threat. First of all, a drastic increase in interest rates will increase the cost of borrowing money for both business investments and home mortgages. Mortgage rates for 30-year terms have recently seen their greatest one-week spike in 35 years. If this interest rate hike causes the economy to slow down too much, it might burst the current debt bubble and send the economy into a tailspin, leading to a recession or depression. In this perspective, Gates' reason for selling his stocks to gear for a possible recession makes sense. Rising oil costs almost always precede economic downturns. The recessions experienced by the United States economy are shown by the dark gray areas in this graph. You can observe how a recession follows every time the price of Brent crude oil exceeds $100 per barrel. A looming economic downturn can be seen in Brent crude oil's present price of around $120 per barrel. As a tax on consumers, higher oil costs nearly inevitably lead to a recession. The high cost of gasoline has a direct impact on consumers' wallets. This not only reduces discretionary income but also has a devastating effect on consumer morale. According to the University of Michigan's Consumer Sentiment Index, consumer confidence is at an all-time low not seen since the depth of the Great Recession in 2008. Debt levels, like the economy, tend to peak and then bottom out at regular intervals. It is not lost on Gates and Larson that the year 2021 was a time of great conjecture. We're headed toward the exact opposite, a severe economic slowdown. Gates and Larson have been hedging their bets against a crash in the US stock market. To that end, shorting stocks is one of the methods considered. Short positions are not required to be reported to the SEC like long positions are. It is not a secret that Gates has a short position against Tesla, as confirmed by its CEO, Elon Musk. In his tweet, he said, since Gates still has a multi-billion-dollar short position against Tesla while claiming to help with global warming, I guess I have some trust issues with him too. Gates has lost over $1 billion on his Tesla short bet, but he hasn't yet liquidated it. For example, it was $500 million, but then Tesla went up a lot, so now it's $1.5 billion to $2 billion to close it out. Elon added, however, one cannot be sure about other short positions Gates may have be holding right now. Considering the possibility of an impending economic crisis, the short positions on the stock market may turn out to be a smart strategy to protect the assets of Gates and his business partner. Is Gates and Larson's move an intelligent one, or are they overreacting? How will these shifts in the economy affect us? Will the way they are preparing for a possible recession? Should we be more concerned about what's ahead for us? Tell us, what do you think? Please let me know if you, too, are selling stocks like Bill Gates. If you enjoyed this video, please give it a thumbs up and subscribe for more. We appreciate your support. See you next time.